Well, welcome everyone, and thank you for joining us this morning. I'm delighted to welcome our next presenter. Harry Boxer is the author of The Technical Trader, a real-time diary of his trading ideas and market analysis. He has more than 40 years of Wall Street investment and technical analysis experience, including 8 years as a chief technical analyst with 3 brokerage firms. Mr. Boxer was the winner of the 1995 and 1996 Worldwide Internet Stock Market Trading Contest, the Technical Analyst Challenge. Harry, it's a pleasure to welcome you. The stage is yours to begin your presentation.
Thank you, and thanks for being here, everybody. Today we're going to talk about what I specialize in, and that's profitable day and swing trading. I wrote a book on it. You can probably find it somewhere. I don't know if it's currently being published, but it will be shortly. Profitable Day and Swing Trading is a book with 17 chapters that goes over my philosophy and trading techniques that I've learned over the last 60 years, actually. I've been trading since I'm a kid. I'm 74, and I've been doing this a long time. The Tech Trader is a really neat website for active traders. It's a place where you can see a day trading diary of activity. I'll show it to you real quickly. And you can see comments from traders all day, and swing trades alerts and live videos and swing, all of that stuff going on minute by minute, moment by moment. If you go to the techtrader.com and just click sign up free for now, you can get a couple weeks for free with no credit card. Just come on in and make some money. You'll probably pay for a year's worth of subscriptions, which is very reasonable in just a free trial period. At least that's what a lot of people tell me. And I think once you come in, you'll enjoy the room. There's a lot of very, very astute, experienced traders, and many of them act as mentors. So I invite you all to come in for a bit. Now, we're going to talk today about my technique, and that is using price and volume surges and pattern recognition to catch big moves in the market. I'm a big believer that stocks in all time frames form the same patterns. Your consolidation patterns like wedges and coils and flags and things of that nature. And if you follow trend lines and moving averages and support and resistance, you can get a real feel for where targets might be. And that's what I supply every day. I give you a day trade alerts. I tell you where the support, resistance, and targets are and where your stop should be. And I think that's the key to trading. And you come in my room, they tell me being in my room for 3 months is like being in a class for 2 or 3 years. So, and what I would also do is invite you that if you come in and you're a newbie or somebody that has light experience, to come in and do some paper trading during the trial period and see how you might do. So let's move on and talk about what I look for every day. When you prepare for the trading session, I come in at 4 a.m. Pacific time, at 7 o'clock Eastern, and I spend an hour going over dozens of charts and stocks and news items that may be affecting such stocks that are surging in the pre-market. And what I look for is big percentage moves and big percentage gains in volume, hopefully both, in a pre-market trade that might be trading and exploding. And if that's a significant breakout over some key resistance, that may be an alert for me and my traders. That's what I'm basically looking for. After it opens, I'm looking for stocks that form pennants, coils, flags, and are consolidating in a very nice fashion. Let me show you a couple examples. If you look at WUBA, you'll see that it was a gap at the opening. It ran up and formed a little coil, and then it stretched out to a larger coil. This is actually a wedge. That's a mini wedge, and that's a coil. But when it popped out right there, about the 35 range, I put a day trade on it. And within 2 hours, it went from 35 to 38 and change. A nice day trade indeed. And I'll show you a couple examples. Then I'm going to go to some day trades from today and show you some examples from there. This one popped, wedged, broke out, put a day trade on it, then formed a flag and broke out, put another coil on it, and then kept going. You can notice that one thing is prevalent in most of the charts that I'm going to show you today. That's when stocks are trending intraday, they tend to trend in a channel. They tend to trend on an angle of about 45 degrees or a little less, but they tend to make higher highs and higher lows. And in this case, the stock went from 470 to 570, a nice dollar trade on a $4 stock, about almost 20%. And those are the kind of charts I look for every day and every moment of the day. One final example, FMI, which is a little different. Take a look at this one. Now this one, really interesting, and I'll show you why in a moment. It popped sharply and pulled back, and then formed a mini coil. Not until volume picked up and the stock broke out of the coil at around 21 did we enter. It then popped wedge, popped flag, popped coil, and then exploded all the way from that 21 range up to 25 and change for a beautiful 20% trade. And that took 2 hours, not even 90 minutes. And then it went into a coil. But that basically, in essence, when the stock is trending and forming consolidation or what I call continuation patterns, and it gets quiet near the apex, that volume usually lessens and it gets very quiet and then it runs. That's what I look for every day. So let's go to some live examples of stuff that happened today. GameStop, which I don't even like this company, but I don't care because let me tell you something, folks. I'm a strict technical trader. Although I look at news only in the morning when it starts jumping as to why it might be jumping and how strong the trend could be. I'm not interested in fundamentals. For the most part, fundamentals, you will make mistakes. If you fall in love with a company because of fundamentals, you will lose money. I will guarantee it. In the case of GameStop, it opened strong and ran up and then formed this little coil. And I told everybody, if it pops this coil, we're going long. Look at the apex of this coil, how low the volume got. And this is right from today. Very little volume, very small bar, and then pop. There's your buy signal. A pop on 400,000 shares in 1 minute at about the 22 3/4 range. Within about 8 minutes, it was 27 and change, literally $5 in about 8 minutes. Then it formed a coil, popped out and ran all the way up to 29, at which point I told my traders, this is the 5th wave on big volume, exit the trade. Now, it doesn't mean you have to exit all of it. I also said raise your stops to about 25.5, 3/4 here. Notice the coil. Again, this is live. This could explode and run to 30, 31, 32, anywhere above this range, especially if it takes out 29. Once you get over 29, 29.10, and it's starting to move right now, you might see the stock make a bigger move. Now, usually when a stock starts out at that angle and has 5 waves, the angle will change. When a stock consolidates, it changes the angle of the trend. Here you go. Watch this. This is now your new intraday channel bottom, and this is your channel top. Always draw a parallel line and bring it up there. So what am I looking for now? 33, 33.5. Not kidding. Above 29, my targets are 31 and 33. If you're a day trader, that's what you look for. Where's my stop? I would raise it to there now at that pullback low on the 26.5. You take that out, you're probably changing the trend. So that's a perfect example of what we look for this morning and one of the trades we put on. One of my associates gave us a heads up on this today. It popped and formed a flag. And when that flag broke out, that was a day trade right there at 640. Within minutes, it exploded to 783, $1.40, and was halted. Unfortunately, it came down hard after that, and it's in a falling wedge, but it doesn't mean it's over. What it does mean is it's broken down to retest support. Nevertheless, if you got in, yes, do you have a question?
Yeah, Harry, we've got a few questions that have just come in during your presentation. Would you mind if we ask them real quick, because they're pertinent to what you're talking about right now?
Absolutely.
So one of our viewers writes in, what chart are you using? Is it a 5-minute, 2-minute, day, etc.?
Okay, when I trade 1 minute intraday charts. I find that those are the best for day traders. I will refer to a 5-minute chart. I'll go like this, 5 minute, and look at the pattern. I'll go 15 minute and look at the last couple of weeks. I want to see what the trend looks like. In the case of GameStop, you'll see that this stock was coiling and going nowhere for a couple of days and then went vertical. Here's a 5-minute chart. Usually when you break through a resistance level like that with big volume, notice how low the volume was. When you see a pop on volume like that, it begins a new trend often. This one went from 20 and change to 29, and I mean fast. Sometimes you catch that wave. Take a look at GameStop now, breaking out. It is now up 8 3/4 or 43% on 29 million shares, and the market's only open 90 minutes. This could be a monster today. It could be 31, 33, even 34. I won't rule out as a possibility based on the top of the channel right up there. But these are 1 minute intraday charts.
Thank you, Harry. One more question. The viewers write in, one of the biggest challenges is figuring out scan criteria to narrow down and focus. What criteria do you look at for setting up these stocks?
I just got done saying the key is for me in the pre-market, I want price popping with volume of at least 3 to 5 times normal volume. If I see, and I don't look at stocks that are up 2 or 3%, they got to be up 4 or 5% minimum, more likely 10 or 20%. And sometimes you get these stocks that are up, 100%. And even then, I might put a trade on it if the pattern looks good, because I often see a 100% popper go up 200 or 300% in a day or even in an hour. We've seen them. We've seen stocks go from 4 to 40 in a day, 1,000%. Sometimes we catch them, and sometimes we make a fortune. Sometimes it's really nice. Who knows where GameStop goes today? It could be 35. Okay, and the stock, we gave it to you 20, 75% run. Now, but what I look for is the right setups. The setup on this one was the run up and the perfect coil. And by little after 10 o'clock, half an hour after the opening, volume came in as it popped out. That's the trigger price right there. And look what it's done since. This is not an unusual example. I gave SYBX out this morning after it popped and pulled back and started forming a wedge. I said, when the wedge pops, we go long. Many of us went long around 320. You had an opportunity to go back to 303. But from that level, within minutes, it was 375. That's a 70-cent run before the pullback. ENG is another perfect example. I've been following it, and this is a swing trade, by the way. I put a swing on it, and see, this is a daily chart. I use daily chart and 15-minute charts for swing trade ideas and entry opportunities. When I see a stock pop and coil, break out in a mini coil or wedge, and then break out, I'll do it again, and now it's breaking out yet again. I'm long, and I'm long, very long at about the 3 3/4 range, and here it is, doubled in 5 days. Can this go to 11, 12, 13? Of course. Look at the momentum, but you don't know. All I keep telling people is keep raising your stops. On the ENG, for example, it wasn't even a day trade. It's an ongoing swing. But take a look at that. The stock takes a dip till 10 o'clock, and from 570 to $8, I'm going to move in less than an hour. If you can catch them right, you got to to me, I don't think the day trade was until 685. But from 685 to 806 is a beautiful trade right there.
Harry, when you're placing these trades, do you make 2 orders at the same time, one for a buy and one for a stop loss?
That is correct. At all times, if you don't have a hard stop in, then you're kidding yourself. I have 55, 60 years experience, and I always put one in. You cannot put a mental stop. You do that. I know that everyone has this philosophy. If I put the stop out there, the market makers are going to see it. They're going to come take me and then run the stock. So what? You can always go back in, right? And the biggest problem with traders is mentally, if you get stopped out and you have a loss, you won't go right back in if it turns around, will you? Because it's like, I just lost money on that stock. Most people's philosophy is, I'm not buying it again. But the truth is, sometimes, for example, in this case on STIM, it popped to a double top and came down in a falling wedge. Technically, the support was right about there. You might have gotten stopped out right there at the low and then watch it turn around. But when it turned around and formed a little flag and broke out and volume picked up, this was a buy right there again at about 1340, and it went to 1450. So even though you got stopped out, you could have went back in and made a buck on it. So that's what I'm referring to, that you have to have a hard stop. You have to have an entry point where look, the one thing I don't tell you is where to buy it. I will tell you what I like in terms of the targets, where the stops and where the support and resistance is. I'm not going to hold your hand. I'm not coming to your house and pressing enter. You have to do that. You got to put on your big boy pants and listen to my guidance. What I do is give guidance all day. I think it's very good. We're in a 73, 75% positive ratio from what my people tell me. And even on the losses, they're all small losses. The winners, some of them are huge. Here's a day trade on Vuzi I gave out this morning. I don't even like this company. I know the management very well. But look at this chart. When I saw it break that coil, I said, we're going for a day trade. Okay, it popped right there. In for a day trade. Excuse me, around 9:35. Within minutes, it was 1026 for 90 cents. And then it backed and filled and formed the wedge. And I said to everybody, this is going higher. Then it popped to 1044 and made a nominal new high at 1050. By the way, that 1050 and 11, those were my targets. What if you're asking me what I do with it now, I would have stopped it already. Not all of it, half my position. People tell me the hardest thing to do is determine when to sell, where to put your stops in. The best thing to do is look for 2 different support levels and say to yourself, stopping half there and stopping half there. What if Vuzi rolls over and it's back to 870 later on today? It's very possible. The other thing to consider is it's got 1, 2, 3, 4, 5. When in Elliott wave analysis, when I see a 5-wave move, I usually tell everybody to sell. Look at the rollover right now. If you didn't sell half your position there and you get stopped out the rest there, if you did that, excuse me, folks, I have a bit of a dry throat today. If you didn't sell it when it broke, say $10, then or 10.10, then you probably need to sell it right there. If it holds right there, it still has a chance of snapping back. Got a question?
Yeah, well, one of our viewers actually wrote in right before you talked about the 5-wave, and he wrote in saying, do stocks pull back significantly after a 5-wave move, and should you look at other stocks for the short term?
Are we talking day trading now? You said short term. Are you talking day trading or swing trading?
Day trading.
Okay. It never hurts to sell the 5th wave, especially when there's volume. This didn't have that volume. It had 1 bar. So this kind of faded away. So when after 5 waves, in basic Elliott waves, there's 5 waves within the first wave as well. This could be the beginning of a big move, and it's only 1, 2, 3, 4, 5. Wave 1, and this is wave 2. We can see wave 3 up here. Okay. If the volume on the pullback is low, which generally it was, there was 1 little down bar when it hit there. Let's see if it holds this zone or not. You know, if you stop, you're stopped. I mean, discipline in trading is important. If you're not disciplined, in my room, you'll learn discipline because I will give you the stops and you'll know it very well if the stock is stopped out. That's all. But in the case of, to answer your question, usually after 5 waves, you'll get a more substantial pullback or a more substantial sideways consolidation, one or the other. In this case, the pullback is at support level number 1 after breaking the trend line. I'm always concerned when trend channels and moving averages as well turn around. See the moving averages roll over and cross over? Bearish signs. So there you go, breaking down as we speak. Let's go to some more examples. ZEDG. Been following this stock for a while. Look at the chart. Isn't that pretty? Technically, this was a buy when it broke out here and formed a little wedge. This is the daily chart now, okay? The daily. Breakaway gap on big volume. Take a couple weeks to consolidate and form a coil or flag right there. There's your breakout. Technically, that was a swing trade at about 315. Within a month, it's 658. And it's coiling again. And within another month, it's 775. My target on this one, channel top around 9 and a quarter. I think it gets another $2. I have a day trade on it. Why? Because it popped and coiled. That's where we went in long. All of us went in about 680, 85. Within 4 minutes, it was 759. It wedged and then advanced to 775, which was my target. My secondary target, if it had continued to run, would have been 8 and a quarter and 9. If it followed that channel, which it did not. Right now, there's your breakdown. So I'm stopped out of half my position there. What I would do now is put that as my second support, that first high, and notice that it held right about 708. What I would instruct my traders to do on something like this, if this is a true 1, 2, 3, 4, 5, and this is wave 2, so we're looking at 1 and 2, and 3 could get you up there. So what we're looking for, a substantial price volume surge and breakout. Now it did pop, but it didn't come with big volume, so I'm a little more skeptical. I would look now for over 742 with better volume. Then the challenge is to take out 775. You do that, you're on your way to 8.5 or something like that. So in essence, in an Elliott wave analysis, this is a 1, 2, 3, 4, 5 wave 1. This is wave 2. Wave 3 may be starting right now. It's starting to pick it up. So if you're long, you're probably long half your position because you're stopped out there or sold some up there. And you're waiting for the stock to pull back. Guess what? If I see a price volume surge above 740, 45, I'm going to take that position I sold up there and add it back so I can be long. For example, just to give you a hypothetical, you bought 2,000 shares, you sold 1,000 there, or you were stopped out of 1,000 there. Okay? It turned around and moved back and broke back out again. If it gets above that zone right there, above that line, and you see a volume bar like that, pop it out, then you go long for another 1,000. Looking for a breakout above 770 and a run to 8, 8 and a quarter, 8.5. It's only a what if. But that's how I day trade. You got stocks all over the place and they're very active today, but you got to be really careful. The Momo stocks have taken it on the chin. Now, little Tanzania. Note this morning, this pop. The breakout came there, and then it formed a rising wedge. We were very good on our timing on this one. Because if you look closely, that's the pop where I said buy at about 3:45. 1, 2, 3, 4, 5, 6 minutes later, from 3:45 to 4:30, 85-cent pop in 6 minutes. See that line there? That was my target, 4.25. We reached 4:30 and then came down hard. So if I say take your profits, take your profits. If you got 85 cents in it in 5, 6, 7 minutes, why would you not take it? Particularly in a $4 stock. We're talking 20% in 8 minutes. When you see big volume crescendo like that, and then big volume down bars, that usually puts a kibosh on the trend, at least temporarily. Another dimension is a swing trade of mine. Let me show you a daily chart. This stock broke out there from the wedge. Pop formed the falling wedge and broke out. I put a swing there when it broke out of this wedge at about 4 3/4. When it flagged, I said if this breaks the flag, it's going higher. My target was a 10. We hit 10.49. It went into a flag and broke out today, and now my target's 12.5 3/4, maybe 14. If this continues to do what it's doing, and it's in a very hot group, we could see 20, 25 on this before it's over, meaning it could blow up into that area. Right now, I have a swing long and a day trade long. Why did I do day trade long? Well, it popped and pulled back and formed the flag, and I said go long if it breaks out. Right there, we went long. That was at 10.40. Within minutes, it was 11.07 for 67 cents. And then it formed the falling wedge. Snapped back to retest high twice, couldn't get through. And instead of breaking out, it's forming in an elongated coil or flag type pattern. Take a look at this. This is a bull coil, my friends. This line is no longer valid. Technically, this isn't either. What we have is a 1, 2, 3, and then this is the long 4. Or is I could count from here and call this a 1, 2, 3, 4, 5. See it? So then technically, pre-market, it went from a low of 9.51 to a high of 11.07 for $1.50 or more. And now it's coiling. So we can take the measured move of $1.50, add it onto the pullback low, and you get 11.90. That would be my target up there. If it blows, it's going to blow. So mid-channel target, which is what I usually use. If this breaks 11.0507 with volume, I go long for a scalp to 11.40.45 and a day trade to 11.90.12. Where would I put a stop? Probably don't want to see it under there. Stop under, say, 10.50. Okay? So that's some of what I do every day in a room. Let's go to a couple more examples.
Hey, Harry, quick question.
Sure.
We have some new attendees that have come in. Can you just talk quickly about the indicator settings you have on the screen and the moving averages you're using for these examples?
Yeah, I used to use 10, 21, and 50 period moving averages. 50 period, not day. A 50 period moving average, just simply put that. You can put down 50. If on your screen you put in 50 day, this is obviously not 50 days. It's 50 periods because it's 1 minute. So you go 50 1-minute periods. But it's amazing how valid they are. So on a daily chart, on NNDM, for example, you can see I have two moving averages. This is the white is the 20-day moving average, I believe, 21, and the 50 is in red. And note when this stock was in a downtrend, the moving averages crossed over right there. After the stock popped and formed the wedge and started to run, that's why this was a buy at about 2.5, technically. And then it's been trending for months now. Look at the rising moving averages. It hasn't even broken the 21-day moving average since mid-November. It's been holding it all along. That's why this is a very strong chart and a very strong trend. And I wouldn't be shocked to see mid to high teens, if not low to mid 20s at some point. It's a powerhouse chart. So we're swinging it and we're day trading it. And the people that got out on this move up here are watching for a move now above 11.0507. We take this little triple top out here, With any kind of energy, I'm looking for a move to these two targets with a stop under there. These are 1 minute charts. The moving averages again are 21 and 50. You can use 20. I used to use 8 and 10 minute moving averages. I don't think they're too volatile on the 1 minute charts, so I don't use them. They're better on the daily charts. Any other questions?
I think that's fine for now. So you use SMA or EMA on your moving averages?
Simple moving averages, but simple moving averages, but the scale is logarithmic. You cannot use arithmetic charts. You have to use logarithmic.
Okay, and how much time do you spend on this business and the activity each morning on these trades? The viewer wants to know, if you do day and not swing trading, can you still swing trade another stock the following day, or should you just concentrate on your opening day trade position?
Depends who you are. Are you a day trader or swing trader? If you're both, look, in the morning, I come in at 4 a.m. Pacific. I'm on for an hour and 10 minutes, going through dozens and dozens of charts. And I pick out a list of stocks we call the focus list. I publish that pre-market. And then when I come on about 10 minutes after 5 every day, or 10 minutes after 8 Eastern, I then spend an hour to an hour and 20 minutes going over every one of those charts, making a decision about the patterns pre-market, how they're developing, and whether or not I think it's a day trade. And if I do, I'll post right then and there a day trade alert with your targets and stops and support and resistance. If I don't think necessarily they're ready right now, I will put them on what we call a watch list. So you can see on the left, this is my day and watch list. And there's a lot of stocks on that list. Let's go show you how many there are on this list right now. I have 67 stocks I'm watching right now. 67. 66, I just eliminated one. But so that's what I'm, and then when I come on, within 10 minutes after the opening, I'm on to review the early patterns. And I stay on for 45 minutes to an hour, going over all the early action and giving some new day trades potentially, or telling some people to be stocked on certain stocks. And so the bottom line, if you come in my room with all the hundreds of traders in there, many of which are professional traders and brilliant technical analysts, and you can't make money, then you shouldn't be trading. You've got to be disciplined. Number one, though, you got to listen to what I say in terms of targets and stops. Let's move on and show you some more examples, unless there's another question or two. Okay. So pre-market, because of news, I saw the pop in Excelis, and I told all my people, this is a bull coil pre-market, and if it pops the coil, I want you to buy the stock immediately. Even before the market opened, it popped. And this is interesting. When the market opened, it opened at 33.85. It dropped to 33.10 very quickly, and then rocketed in minutes from 33.10 to 37.63. So everybody who bought it there had a 4-point trade. And now it's pulled back in a falling wedge, and it's coiling. And in essence, it's a 1, 2, 3 and a long 4. But I don't like length on consolidations because it interrupts the trend. What I mean by that, the angle of this ascent was like that, a very powerful move around like that. See it? So technically it didn't break, but it moved sideways through the channel and it changed the channel angle. But for me, if you're in this stock, if you didn't sell it and that spike to my target was 37.5. We hit 37.63. So if you didn't sell it and you're still in it, then you got some angst because where's it going to go? Well, the stop right now is 33.70, below that pullback low. But if it rights itself, it may come back and it may make a higher high. The trade is out of this, though. This was the trade right there. Nikola opened today with a pop and a little wedgie, and I said this stock's a day trade if it breaks out, which it did. Look at the low volume as it pulls back for 4 or 5 minutes and forms a little micro wedge. See the wedge? As soon as it popped, we went long, 20 and change to 22.5 for $2.25, in 30, 40 minutes. And now it's drifting back down again. Where was the stop on something like that? Why would it not be right there? See the pullback low and this pullback low and this pullback low, and then finally it broke there? That's where you got to stop it, around 21.40. Eventually get down to 20, and now it's trying to come back. PEIX. And by the way, they're changing their name. They announced it today to Alto. ALTO is a symbol. Anyway, I told all my people, if you look at the chart, and by the way, this is one of our most successful swings this year. When this thing broke through, and I don't usually give swings on stocks under $2. So when it broke here and it got up to about 260, 70, I put a swing on it. It then formed a coil and broke out. I reiterated a swing with a target of 8 and 10. The stock hit 1144. So here we're talking about 300% in 90 days. Then it pulled back. When you get that kind of a move, you often get these kind of pullbacks. So what it did is it got a very tight channel. And I told everybody if we get over 750, which is the high right there, 749, it's another swing back up to 11 and maybe as high as 15 or 16. The day trade on this one was also that if it broke out right there, it was a buy. It's gone from 740 to 794. And it's still trending. Beautiful day trade. I'll give you guys a little treat. I just put a swing trade out this morning on LightPath. A couple of my institutional guys love the story. I like that. That's all well and good. I have institutional clients that feed me ideas. And I don't do anything with those ideas until technically I like what I see.
Hey, Harry, we're coming up about 60 seconds, a minute or two left on the session. If you want a closing coming up.
Sure. Anyway, so this one to me is a run to about 7.5 and 10, 11 range. And finally, FSRB. I love this new SPAC. It's going to be a home run. You can see it ran all the way up to 18.75. It looks fabulous. I think the stock is going to be a $30, $40 stock. And I'll leave you with that. But I invite everybody to join me in the room and spend some time and learn a little bit about technical trading and perhaps make a lot of money. Yeah. And again, sign up for free at thetechtrader.com and spend a couple of weeks with me. This has been a pleasure being with you, and thanks for being here.
Excellent. Well, Harry, we really appreciate your time. Thank you again. I know our audience appreciated your insight. And as a friendly reminder, you can access all these sessions on demand by visiting virtualpass.moneyshow.com. Thank you very much.
Okay. Bye-bye.
Have a good one. Thanks.